It's not just healthcare reform that's being held up on Capitol Hill. In the midst of today's home foreclosure crisis, legislation that would create a consumer financial protection agency is now also being stalled in Congress, as the Chamber of Commerce, bankers, and conservative ideologues collude to block it. But a new documentary, American Casino, shows why the effort to get new consumer protections in place must not be allowed to stall. We talked to the film's co-producer, Andrew Coburn. We start by discussing what prompted him and his wife Leslie to make the film.
It's a film, we started making it in January '08 as it was clear to us that America financially was going over the cliff, and this was a financial catastrophe that's really based on on exploiting the poor. I mean, it's a catastrophe of predatory lending.
Okay.
So, because the title really comes from a statement by a very distinguished financial reporter, Mark Pittman of Bloomberg. He said, when you're in the streets, meaning Wall Street, when you're in the streets casino, you've got to play by their rules. But people, the American people, didn't know they were in a casino. So we all got caught up in this Wall Street gambling frenzy, really, and they called it good investments, but it wasn't. It was just bets. But it was based, to an extent far greater than people realize, on the backs of poor homeowners.
Well, talk about that a little bit more. You actually went out into the streets of Baltimore and some other cities as well? Or?
And we also went to California, to Stockton, the epicenter of the sort of exurb, the sort of suburban and beyond suburban housing meltdown, and also Southern California and Riverside County, east of Los Angeles, where it's, as I can describe in a minute, a very post-apocalyptic scene.
A lot of people say that, yes, there was some unscrupulous behavior among lenders, but there was also a lot of unthinking among consumers as well. Sort that out for me.
Well,
what did you find?
It's a very basic issue which we really address in the film, which is to blame this very fashionable current nowadays, which is to blame the victims. To blame, we have massive international banks, giant investment houses, brokerages. No, it wasn't their fault that the financial system is on its knees. It's the fault of, well, like the people we come to know in Baltimore, a therapist at Johns Hopkins, a high school teacher, a minister of the church. All three of them are, in grave subprime foreclosure difficulties. We are meant to believe it's all their fault. It wasn't. It wasn't their fault. People were basically defrauded, I would say, but it was certainly misled into taking on loans that no one could have afforded, at ruinous interest rates. They were told that they would, they could always refinance. They couldn't. They were told the price of houses would always go up. It didn't. They were told that, the monthly payments would be one thing, and then they turned out to be another, much higher. They were told, most people gave their incomes honestly, and it was the mortgage industry that created the liar loans. I mean, that was the overwhelming case.
Can you give me a quick example of a particularly graphic example that shows up in the film?
Well, I mean, there's examples of, for instance, our high school teacher. I mean, he and his wife had dreamed of a house of their own. They had, just by borrowing, they could figure, relatives scraping every penny they could figure they could get, just afford the house, just afford the monthly payments of $700, $750, and they get to the closing, and they're just, the pen's over the document, and they say, oops, no, it'll be $1,050. It's $300 more. So that's a huge hole in their budget that they carry on. Then the interest rate keeps going up. They have two mortgages. They're being charged just under 12% on their mortgage. I mean, which is outrageous. It's that's loan shark rates. And what we found most interesting about his case is that normally you hear about the homeowners and their subprime mortgages, and then you hear about Wall Street and its securitized instruments, these esoteric bonds that just show up on the computer screens. We were able to find our high school teacher, Denzel Mitchell, a very fine man, in a Goldman Sachs bond, in this abstraction of a Bloomberg screen. We were able to say, that's Denzel, that little electronic dot there.
So we have a debate that's going on right now in Congress over a Consumer Financial Protection Commission that many conservatives and business interests have been fighting against. How important is that legislation? How important is this fight?
It's vitally important. I mean, the consumer has been left, naked and vulnerable, with really the people who should have been looking after them, asleep at the wheel. I'll give you an example. In end of 2004, beginning of 2005, there was a move inside the Federal Reserve. They have a consumer regulatory, division, to crack down, to tighten the rules on subprime lending, on subprime advertising specifically. I mean, the terms under which you could offer a subprime loan. And, they had all the, a lot of very, sensible, straightforward, simple proposals to make. And the mortgage industry fought back. And they said, you can't do this, this will ruin us. And the Fed caved. So they didn't do it. So you've got to have because the Federal Reserve obviously is an anomalous position. It's really there to protect the interests of the banking industry. So to say that it should be regulating on behalf of the consumer is kind of not a very good idea, I don't think. So yeah, it's vitally important that we have an agency with teeth, and with aggressive agency with teeth. That is, acting on behalf of the consumer.
What do you hope will happen with this film? What do you hope activists will be able to do with this documentary?
This film, what we do in this film, in American Casino, and you can find out a lot more about it on AmericanCasinoTheMovie.com. That's AmericanCasinoTheMovie.com, or one word. Is we show what happened. We start the movie. The first line of the film, written on the screen, is by 2009, the American taxpayer had committed $12 trillion to bail out Wall Street. Most people would like to know why. And we explain why, what happened, what was going on, how the ratings agencies were basically part of the fraud, were issuing fraudulent ratings on bonds, how the banks were pushing out, it was in their interest to make more and more aggressive loans, and we explain, what the consequences have been.
Thank you.
You're welcome.